Welcome to Trading Lounge and the commodity section, and here we're looking at gold on a weekly chart, our triangle pattern. We're still in wave E here, which will be in 3 waves. We're still in the first leg. Let's go in and have a look at where we are. So what we're looking for at the moment is the top of wave A, which can be in place here, or we're looking for one more high here. Okay, so let's go in and have a look at that. Once that's completed, then we'll see a larger ABC correction pulling back to the 1300, the 1280, the 50-60% retracement level. Now, this little pattern that we're following through here, I mean, the main point here is, and I've been going on about this, is that, you know, we had our targets at the 320 and the 330. They've been met. We're going through a series of 4th and 5th waves here. So there's 3 parts to the trend, really, the beginning, the middle, and the end. And the idea is to catch the middle. The end is overlapping wave structures, so it's tricky to trade, tricky to call. So, you know, it's best not really to get involved in it as such. You know, so look, but in saying that, we need to work through it. So at the moment, we have a sort of a conflicting viewpoint between the Elliott count and the trading levels, simply being that the Elliott count is calling it down through here, and the support, it's checking support on the 1320, which is the pivot within group 1. Group 1 is 10, 20, and 30, and support on the 20 there is not a big deal, but it's a reasonable deal. If you're going to short it, you would want the 20 as the retested resistance as such. So they're not really on the same page at the moment. But in that, yesterday we were looking at this move up through here as wave B. We're still looking at it as wave B, but in terms of an A wave, a B wave, and a C wave in 5 waves for wave B, but we need to see this market move down from this point here. If it takes that high out there at 1327, I think it is, then this market is moving higher from this point, and that's why it's important not to short it once, you know, sitting above the 1320 there as such. So support on 1325 would sort of flip the balance point to the upside here, because obviously all the supply is up through here, these little head and shoulders things here. So, you know, support on top of that, you know, a bit like this whole pattern here, but sitting on top of a smaller version, sitting on top of the 325 would flip the balance to the upside. So for the count that we've got at the moment, the B wave here, the A, the B, and the 5 waves for the C wave of C of B, that needs to stay in place, and we can look at this as being down for 1, an A and a B and a C, back for 2 here. But like I said, we need to see it. We'd need to see the Elliott count, you know, move back down from that point there, and the short position would be a retest of the 1320 there, and using the 18 as a trigger there as well. So that's what we're looking for there. Yeah, so let's just see how it goes. It's not a big deal either way, really. We're not that interested in this particular market. The same for silver as well. The sort of long, laborious pattern through here, you know, we can match it up with the gold market as well, in terms of having the 5th wave into play here, the A, the B, so the A, the B, and the C here for the A wave, the B wave to here, and looking at the C wave moving, you know, back down into this area through here. But once again, you wouldn't want to short this being above the closest largest number, the 2100. You would need that as the retested resistance there as such, and if that's the case there, would be looking at this as down for 1, back for 2, which it's doing now, and then down for 3 and 4. So you look for the, you know, well, you can take a break of that really there if that was the case. So you wouldn't have to wait for a retested resistance as much, but you'd need to leave the stop above this wave 2 here as such. But exactly the same sort of pattern here. Okay, the copper market, as you know, we've been looking for a high in this market in trying to, work out the five-wave structure in this move up through here. And it's probably, there's a reasonable chance that it's in play. We can see that at least it's stalling here at the moment. It's looking a little bit weaker. So basically we're looking at considering these five waves done and dusted, and we'll be looking for an A and a B and a C, a little bit like gold as well. So we'll see precious metals and base metals sort of move together a little bit as well. We'd also need to see like the US dollar push up from this point as well to push these commodities down. So I might just have a quick look at the dollar next, but this is what we were thinking for the top of the copper market here, the wave 4, the wave 5, and then the 1, 2, 3, 4, 5 moving down. So we don't have an impulse wave down here yet. We're just assuming that that would be the case. So if you're going to short this, you'll need to keep the stops above this high here. The US dollar, just while we're here, we were looking for a 50-60% retracement level from this high here, but I'm always a bit skeptical about spikes in the market as such. They just sort of bug me a little bit, that if we took that off there, then that would make the top of the market here. But at the same time, we're looking for 61.8% back here. But even if we took this back into this area through here, we've still got 61.8 at the 80 here. So what we would want to see from here is a move up from this level here. So that would make the impulse wave to the upside, some type of corrective move to the downside, support on the 80 and the 61.8, and the volume support over here as well, where the market took off from. All those orders there will be tested now, as I can see that that's the case. So we need to see it settle and develop support here and move up. So if we see that here, then we know that's going to add extra, pressure to those commodities. But if this 80 here becomes the retested resistance as such, like this here, and can't get back up through there, then we know that it's not the case, and those markets will push higher. So they're working their way into a corner. But as I originally said, there's not a lot of trade trend scope in those metals markets. Probably a short on copper would be all right, but you might as well just trade stock at that point too. The oil market was pretty much on track in terms of moving down, so I'll just thought I'd have a look at the bigger picture here for a second. So we're looking at the 100 here. I wouldn't really want to turn bearish until we had the 100 as the retested resistance, but I'd have to say this move up through here on the weekly chart is, this move coming down is giving us overlapping wave structures with these highs here now. So it is really confirming the A, the B, and the C point here. So if that's the case with this larger pattern here, we would be looking at this as down for 1, back for 2, down for 3, 4, and 5 to finish this move down through here. So we could have a larger bear market for the oil beginning here now. So just drilling into that on the weekly chart the daily chart through here. This trend line's been breached already through here now. And yesterday we were looking for a move down from 103 down to 102. So we've got that now. And we'll be looking at this as a larger impulse wave now, as wave 1, wave 2, wave 3, 4, and 5 here, a bounce off here as an ABC, and then a move lower through here as well. So that's basically what we're looking at in the bigger picture, and moving into the intraday here on the 2-hour that we've been tracking. I have put that wave 4 here on that spike here. It's just the best fit. So we're looking at a 5-wave structure from wave 4 to wave 5 to make wave 3 here. I've put it more dominant than wave C here, but it is possible that it's a wave C, but we'll see how it goes. So yesterday we're looking for 1, 2, 3, 4, 5. We'll drill into that in a moment, but once this is basically finished here, then we'll look for an A and a B and a C that can pull back up to the wave 4 of 1 lesser degree, and then we'll see a move down here for wave 5, which will make a larger wave 1 here. So we'll see a larger bounce off the, or around here as a corrective pattern here. So that's sort of what we're looking at in those terms there. The move down through here on the 15-minute chart, I was kind of looking at it like this really, from, that should have been wave 4 here, sorry about that. So down for wave 1, back for wave 2, and I can count 1, 2, 3, 4 and 5 here for the third wave. So I'm thinking there's a fourth and a fifth here to finish that third wave, you know, and then we'll move up from that point there. So yeah, that's about it really. This would pull back this fourth wave here once it's sort of in place here. If we took that down to 1072 here, yeah, look, basically would be looking for, that's probably a bit unfair, sorry about that. Let me just, that would have to be nailed in here. So look, it can pull back to the fourth wave of 1 lesser degree in here. So just be aware of that. That's the 38.2 retracement back into the 102.50, 102.60, but it can take this target here as well. It just depends on the sentiment coming in at the time, but look for 5, 3, 5 structure, and then down for this fifth wave here. Like that. Alrighty. Okay, onto the grains. So the soya beans here. Let me just see if I've got a bigger picture here. Yeah, right. So this is where we are with this. Is what we've been looking at here. So we're looking at it's possible 2 counts here. Realistically, this is an A, B, and C wave here, finishing here and moving up from here. That's possible, okay? The other count we've got would be down for 1, 2, 3, back for 4, and down for 5 here. That's probably the most viable, and the reason for that is because this move down here is rather sharp, so it's got the personality of a third wave, not so much as a wave C here. Okay, so in this move from 2 down to 3 here, we're looking for 5 waves. We've got wave 1 and 2, and we're looking for the bottom of wave 3 here. Then there'll be wave 4, and then there'll be wave 5. So we're looking for the bottom of wave 3 here, and I think that's in place here. So from wave 2, we've got wave 1, 2, 3. Looking back for wave 4 here, pulling back to the 38.2 retracement level, which is the 1272 area here. And then wave 5 down here to make wave wave 5 of wave 3 here. So basically we're looking for, and it's probably started in here with all that little bouncing around here. And it's also on group 1 here. So group 1 is 10, 20, and 30 here, and it will slow the market down. So we normally get it's very, very normal to see a bounce off 30, the top of group 1, to go back to 40. That's the norm here, or 50, and then to the next level, and then move down. But in this particular case, we're looking for a larger correction. It may or may not come, so just be mindful of that. It could be just a short wave 4 here, but that's basically what we're looking for here as such here. And then we would see this wave 3 here. We would see a larger wave 4 come back again, which would pull back to the wave 4, 1 lesser degree again. So all the wave 4s are will line up across here. That's what makes wave 4s a little bit tricky, and then wave 5 moving down like this here. The wheat market and corn market are a little bit more advanced on the downside than soya beans, and we've already been looking at this down here as wave 1, 2, 3, cross for 4, and down for 5 here. If the old low here becomes the retested resistance, it's got to retest it first, then we can look at the market being pulled down to the 500 here. especially if the 550 becomes the retested resistance. If you're trading this down through here, then maybe use the weekly robo. It just works a treat, that's all. The momentum is still to the downside, even though the market would be oversold on the weekly or the daily as such. So in looking down from here, we're still looking, we're just counting this down through here, so there's still more to come down to the downside here in terms of the wave count here. But the next step is really the 550, 5 being the second strongest number in the market. So we'd expect to see some consolidation here, and that could also retest back into the supply zone here close to 560 or 556. 56 is a number that's a bit of a GAN number, really. So it's always worth keeping an eye on that particular number in any market, 56. Right, the corn market's pretty much in the same boat as well. What we have been looking for here is 5 waves down the daily, the 1, 2, 3, 4, and then 5 down here. We've been counting 5 waves down from here as well, the 1, the 2. And we're thinking that the 3 and the 4 is in here and the 5 is down here. We're counting 5 little waves in this last little structure down through here that may be finished or may not. It may end up down at the 380. But once it's down here, we expect it to come back and retest the 400 from here. So this market's a little bit more advanced than the wheat market, and definitely over the soybean market as well. So moving into here, from wave 4 here, we've got wave 1, wave 2, and I'm just looking at this as the third wave into this little area here. It's a very small fourth wave compared to this wave 2 here, so that is a little bit of a concern for me. We may end up getting a whole extension coming further down into lower through here, so that would mean that all of this is just the third wave as such. So the third wave is still down here, and all of this is the third wave. I'm not sure, but like a 1, 2, 3, 4, and 5 for the third wave down through to here. I'm not quite sure about that yet, but and that's quite possible when we're sort of looking at what could happen to the US dollar and these, you know, these crops having potentially good harvests too, based on the current weather situation. So, but if I look at this the way that it stands at the moment, we could have that wave 3 and 4 there. And then we're looking from wave 4 here, we're trying to count 5 waves down through to here. So with that in mind, this would be wave 4 here on the 1 hour, the 1, the 2, a nice strong third wave with a gap in it as well. Third wave is always the strongest in most cases. And the 4th wave and the 5th wave here. And even in this 5th wave, there'll be 5 waves there. And it could be counted that it's already done there. If we put the 4th wave here, then we'd go 1, 2, 3, cross for 4, and down for the 5th here. But I wouldn't sort of count my, I'll be a bit careful about that. But the next level, 390 becomes the retested resistance. Look to 380, which is probably more probable in this particular case here. If you are still short, then the stop needs to be at 411 through here. But of course, you could bring it down to this, take it to wherever you want, just talking about the weekly robo, that's all, because the momentum is still to the downside in this market. That's the important thing as well. Okay, the coffee market has held its ground quite nicely since yesterday, while the other commodities have been moving to the downside. It's still above the 170, still above the 172. The count that we're looking for is the A wave, the B wave, and the C wave up to here. I don't have a lot of confidence in this particular count, but it's the best fit that I can see so far. But at the same time, we're not really interested in having a strategy in play for this particular market just yet. So I won't go into a lot of detail there. The sugar market, it's down on the 50% retracement level. This is a 61.8. So between 17 and 1730, the group 1 area through here, we're looking for support. We're also looking at this 5 wave structure to the downside, ending down in this sort of area here too. and then we're looking for a stronger bounce back up, retesting supply or the 18 area here. Yesterday we got ourselves a move up through here, because this whole wave structure down through here counts quite nicely as 5 waves. I don't really have any problems with it. That third wave could probably go in here and that fourth wave to here, but apart from that, that's all pretty good, and even all of this here is fine as well to that 5th wave there. So I can see that. So we looked at this being part of the correction, and I think I'll just keep this here for the time being as an A wave, a B wave here, and still looking for the C wave up. But even if I'm wrong, it doesn't really matter. We don't have any skin in the game at this point here, and this is the 61.8 retracement area down here. So we're looking for a bounce here or some type of corrective pattern here. And if this is part of the corrective pattern here, then wave C here will have 5 waves in it, looking to move back up into this area here. So the A, the B, and the C wave here, and then we could look to short from here, pretty much based on the resistance of the 1772 area through here, because it is a 772 number, and as I've mentioned before, when they get your first arrival, it's not such a big deal, but after time goes on, you start to really notice it becomes a real balance point within the market. So I think that's still got to play out, and I think we can still use that a little bit later on. Okay, the orange juice market, there's no change in this. We're looking at a wave 4 pulling back to the 150 something or other. Wave 4s can get complicated. They just need time to resolve and rebalance from a strong move down. It's a strong emotional thing. The bigger the emotion, then the more time it takes to get over it, and that's what a wave 4 is. So that's why they can get sideways and complicated. I do see this as corrective, even though it could even become an impulse wave. You'll be able to see on the daily indicators, the stochastics and things, that they've pulled right back real fast. So it's not going to go that far as such anyway. So we want it to mature across that 150, and we'll pick up the thread from there. But all going according to plan, we would see this. I mean, far as I can see so far down, this would be an ABC correction down, and the market would move up from there. But I don't think that's the case. We're looking at this. Even though I don't understand this section in here very well, we're still looking at it as 1 and 2 in here somewhere, a 3, 4, 5 here, then an A and a B and a C wave here, and then we're going to be looking for the short position here. Okay, well that's it. Thanks for tuning in. Cheers.